Welcome to Drill Down Earnings. We have quarterly results out from Cadence Design Systems. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research. We look at the 50 most important companies in technology. Cadence Design Systems is certainly one of those. It's a company that has long been used for the design of, they make software that has long been used for the design of semiconductors, and increasingly the systems around those semiconductors competing against our friends at Synopsys. This is the business story behind the stock on the move. The stock sold off with these results, and then as the market came to understand them, the stock came back. So what was in these Q3 numbers? Was it a beat? Was it a miss? It was a little bit of both. It was about in line with what Wall Street's estimates were. In fact, a little bit better. Record-breaking revenues, record-breaking backlog, I should say, of $7 billion. A nice quarter at $1.34 billion in revenues. But their guidance for the remainder of the year, which is to say the only quarter that's left, was suggested that next quarter will not be as great as Wall Street had expected. We look a little bit deeper at the numbers that tell us what's going on with this business. So revenue growth of 10% is tailing off a little bit. It was growing as much as 25%, a year and a half ago or so, a year ago. Nonetheless, backlog is really big, as I mentioned, $7 billion. They're really tied into AI infrastructure investment, and they did, their full year revenue outlook has increased, 14% year-over-year growth, but maybe not what Wall Street had been hoping for. Operating profit steady at 32%, and that's helped them be profitable and indeed have a lot of money to return. So they bought back $200 million in stock. They've got almost $3 billion in cash, $2.8 billion in cash, supporting more capital returns in the future. Look at what their business is. So their core business is selling software for electronic design software. Think of it as semiconductors again and the systems around them. Their system design and analytic and analysis stuff is their testing equipment, 15% of revenues. But importantly, intellectual property. So I like to think of this as kind of the Legos of software. It's stuff that's already been designed. So the customers of Cadence, Synopsys has a similar business, the customers can get some big chunks of software already ready to go, whether it's systems that plug into the semiconductors that are designed or ports and buses and networking software design stuff. That's really interesting because that's a business where Synopsys, their competitors, struggled a little bit. And indeed, so we saw the core EDA business growing for Cadence, growing at 12% on a year-over-year basis. And as I mentioned, 71% of revenues. But their intellectual property business, they boasted about it at the press conference, or the press release, I should say, and a little bit on the conference call, but it's growing more slowly. It's growing only at 10%, when again, that business has been growing quite a bit. So some of the same headwinds hitting Synopsys as hitting Cadence, and I think it's something to keep an eye on here. But their core EDA business remains strong. The Cerebras AI Studio driving those results, as well as verification platforms that are giving a lot of productivity gains to designers as they're embracing this new age of AI and completely different types of systems. They talked in particular about big customers they've got at Samsung, at OpenAI, designing these systems, as well as their IP business. I say that it's outperforming what their expectations were. Okay. They talked about competitive wins for high bandwidth memory 4, HBM4, as well as a newly acquired ARM Artisan Foundation IP that they think is going to help them with ARM designs. Their hardware business also doing well, a record Q3 for them. Major expansions of Palladium and Protium deployments, which are important platforms there at Cadence. So the stock sold off, as I mentioned, then came back as people started to read through these results and basically was flat in after hours trading and up 37% in the last year. Now, let's talk about China for a minute. So export restrictions disrupted their business in Q2. As we know, the Trump administration announced there was going to be no more sales of all kinds of stuff and high-tech stuff into China, not least of which this high-end software. And the restrictions were lifted. And so deferred shipments from Q2 happened in Q3. So these Q3 numbers were goosed a little bit by stuff they couldn't sell in Q2. But now they say things have returned to normal. Design activity in China say has actually been really strong. And domestic investment in semiconductor self-sufficiency means that China wants to make their best chips in China, not buying from NVIDIA and the like so much. And maybe that's good news for Synopsys' business in China, if not for NVIDIA. We'll see. And of course, this is top of mind because President Trump meeting with Chairman Xi later this week. But we'll keep an eye on what that means for this company. Because when you look at the numbers, China's still a drag. It's not growing as fast as the US, certainly, in terms of design activity. and maybe holding back what Cadence could be doing. Asked about it on the conference call. Here's what CEO Anirudh Devgan had to say.
China, overall, I would say the behavior in China, from what I can tell, is back to normal. Of course, there was disruption in Q2 for obvious reasons, given, the policy in Q2, but the behavior that we are seeing is back to normal in Q3. And a lot of it was driven by, us prioritizing hardware deliveries that we could not do in Q2 into Q3. But overall design activity is strong in China across, semiconductors are essentials to every country, and China continues to invest in semis. But overall, I would say our strength is broad-based, not particularly tied to any one geography. And there was some, makeup from Q2 to Q3. Now, it's difficult to predict the future, but what I don't see any unusual activity in China. Question maybe is there any, pull in from future quarters? We don't see that in terms of what we see. And we see overall broad-based trend in other geographies as well.
So he says we're seeing overall broad-based trends in other geographies. I don't see it in the numbers. Maybe we will next quarter. We'll keep an eye on that one. But what's it all mean? What's your big drill down earnings takeaway? Well, before I give you that, subscribe to this show, follow us. I've got 4 kids in college. I need your help. So that would help us, our numbers, quite a bit. So most of our viewers and listeners do not actually subscribe to us. We can see it from the data, and it would help us a lot if we could actually count you among the living. It'd be great. All right, but your summary here. So Cadence Design, Q3 numbers, your essential drill down earnings takeaway is that 10% revenue growth was good, not great. Just under $1.4 billion in revenues for the quarter, with a giant backlog for this company, the largest they've ever had of $7 billion. But the one number that tells you a whole lot, I think, is about their China business. $240,991 US in revenue for the software and stuff that they sold to China, software and other types of software pieces. That number was good, but it's not growing at the pace it was. And indeed, they probably pulled forward some 2Q numbers that they couldn't sell in Q2. That was in Q3. It's not showing the growth that we're seeing, certainly in the US with Cadence Design Systems, hoping we'll see more. All right, thanks for listening to Drill Down Earnings. I'm Cory Johnson. Check me out at X at Cory TV. You can follow us on TikTok, Instagram, and YouTube at Drill Down Pod, as well as on Spotify, iTunes, all the many places you can listen to us. We really appreciate you listening and watching, and indeed look forward to your comments.